Good evening, it's Quant Trade Edge, and today I just wanted to do a general market wrap-up, and I wanted to follow up on the market timing indicator that I mentioned a couple of days ago. And again, that market timing indicator is looking at the 2-period RSI on the pit session VXX, the volatility exchange traded note. And if you remember from a couple of days ago, when you get a 2-period RSI greater than 90, this was 87, this was 96, you would short. And then on any subsequent higher close, which this actually was not a higher close, this was also not a higher close, but here there was another higher close, you would add. And you could add in an inverted pyramid where you do 1 unit here, 2 unit here, 3 if there was another one, however you'd like. But basically you would have shorted 22.94, and then you would have shorted 24.77, and today's close is the exit. It's the first close below the 2-period RSI being 50. This one was 55, and then today it closed at 27. So you basically would have covered at 22.87, which means this first sell was a slight positive, 22.94, 22.87, but then this one up here from 24.77 to today's close of 22.87, 24.77. That's basically a 7.7% gain on this short. So let's say this first one was break even, and this one's a 7.7% gain. So again, it's like this, for now this VIX spike is over. If you want to extrapolate a little further into the future, this is the 10-period exponential moving average. I would wait for a close below that to say it's all clear, because this could launch again from here, depending on what the S&P wants to do. But once you get a close below this line, that would kind of tell you that this VIX spike, which would correspond with the correction, is over. I wanted to show you one more bit of timing, which is actually a pretty amazing little feat, but I'll explain to you how I knew this and where you can learn more about it. Showing you this chat that we had yesterday, and at 12:47, and again I'll show you the time, I posted this little chart here and said flat flag, often the last one in a trend, 1 minute chart. Now I'm waiting for a 1 minute with 7,500 or more volume in ES. And I'll blow this chart up so you can see what it is. It is the 1 minute chart of the DEES S&P contract. And you see how this little bit here is a flat flag. And then it broke lower, and you'll recognize this is actually a hoagie here. You've got 2 bars inside the 1 bar. But then, the fact that it got rejected that quickly tells you this last flag failed. And I started watching it when I saw the flat flag. Then I saw this and I saw this, and then that was my cue to initiate longs. And I'll show you the context here on the actual CQG, on the actual live chart here. Let's get down to 1 minute. Let's take off this indicator because we don't need it anymore. And let's take off those indicators too. Take off everything and just go straight to price action. And let's go to pit session to get all this overnight noise out of the way. Okay, so yesterday, you can see how we kept selling off, and every time you had a flag, you go up and come down, go up, come down, up, down, up, down. And in fact, we can highlight these flags on the 1 minute chart. This is sort of your first flag if this was your impulse down, and then this is your impulse down. This whole thing here is a flag that moved up, and then this whole thing here was a flag. This whole move up was a complex flag. This was a pretty small continuation flag. Ideally, in a perfect world, you could have said, "Oh, this looks like a flat flag," and you wouldn't be horribly wrong if you thought that. But the fact that it didn't get rejected quickly, tells you that that wasn't the final move. And then there was resistance in the middle of this this flag area here when that happened. Again, push down, move up flag, push down. This is the flat flag that I pointed out in that chat, and again, this is 1239. There's a flat flag. There's your little pop, breakdown and rejection right away, and it was around here that I thought that it was time to switch sides. The climax had come in, and then being that this hoagie broke, I used this right here as my stop below that line. So bottoming is a process, and it did take about 30 minutes to kind of bottom before we happened here. And then if we throw our volume in, and this is kind of where I was asking, wanting to look for that volume confirmation also, and I thought 7,500 was a decent level just based on what had been happening. So here on this final breakdown, you kind of had volume declining, and then you had this recovery, and then all of a sudden here you get volume. I don't know if this is it greater than? No, it's about the same as, but it stands out like a sore thumb when all through this decline you're primarily reds and your greens are not as big as your reds. Then all of a sudden here you've got this declining volume on this push down, and then recovering right away. This bar right here, and basically all I'm saying is tape reading. This is just tape reading, where we took out this whole flag consolidation on pretty good volume, and then where does it start really taking off is over here. So this is kind of where we got our 7,500 volume in this bar right there. So that's a little bit late to the party, but you'll see how much further it went. And let me get a trend line here. This 4290 is kind of where I was looking for this to happen here, and so once this happened, it just kept going, and we didn't get the volume confirmation till here. But even then, we went all the way to 4330 and a quarter, and even getting in here was around 4,300. So you still had 30 points if you waited for all the confirmation. If you got in a little lower, maybe you had 45 points. But you had to wait, and it was a little bit annoying going through this, given the heightened environment yesterday. So anyway, and I did want to tell you where I learned about this flat flag initially was Al Brooks. Al Brooks, price action trading, and he makes it very clear that the last flag in a trend is a flat flag, and that's pretty much what a flat flag looks like. It's just a sideways flag as opposed to the kind of flag that goes up more, and then followed by this immediate failure. And that kind of tells you that the mood is changing to the other way. And if this wasn't impulsive, this was basically 87, about 20 points in 6 minutes or 7 minutes with this kind of a volume profile. That tells you your bottom is in, and then you've got residual momentum carrying you from there. So anyway, that was just a wrap up on the original VXX strategy that we'd mentioned, and then just how to catch the exact bottom, pretty much on that big sell-off that we had yesterday. And that's pretty much it. And try to find that, see if there's any more wisdom in the in this thing right here. Flat flag, pedal to the metal, time, squeezes are vicious. Yep. Oh, and then Palantir. I'll just throw that in there for a bonus. Palantir yesterday, PLTR. It was already having a pretty firm day yesterday, even with the market itself being ugly. So in ugly tape, I mean, the market didn't turn till 12:30. So about here, the market didn't turn till this time right here, and Palantir gapped up and was up significantly on the day already. And basically what this did here is this created a intraday cup and handle pattern. You know, you've got your impulse up, you take all day resting, and let's see what the volume profile looks like. You know, you've got some reds here on the right side, you've got more greens than reds, and then you have this little compression. And one thing I like to look for in the compression is what I call ATR low, and that is the 3-period ATR divided by the 10-period ATR being less than 0.7. And we got one. We got a little signal right here telling you that the volatility is compressed. So if you took the breakout, you know, this could have been your breakout yesterday, and this would be the bottom of your flag, and that's your risk level. We got many multiples of that risk level today. The only thing that complicated this is the fact that that cup and handle came late in the day yesterday, and we closed here. So you always have to be careful with the opening bar, because the opening bar can be deceptive. They go down there and try to trap people. And this low was 82. This low was 82, so you technically would not have gotten stopped. So you basically had a stop of 81, because this low was 82. 81, and if you bought 91, so you had 10 cents of a stop from 91 to 81. And we got all the way to 1896. I'm sorry, 1596. So 81 to 91, you got $1. You got 10 to 1 risk reward right here on a cup and handle pattern. So anyway, that's all that's going on now. Ask me questions, happy to answer.